but I think that it's their only hope out of this. I think there's people on Wall Street that are actually able to do this math. I think they're somewhat starting to see what the value prop of Bitcoin is. And I think hang on to your hats, because I think the next 12 months for Bitcoiners is going to be one hell of a ride.
What does that mean? These f***ers are going to print. They're going to print until their f***ing eyes bleed. And we know it's going to happen. And so all we've got to do is outlast them and then watch them as they suffer.
Well, if Bitcoin will become the ultimate type of a form of the currency been adopted by human society, I can tell exactly what's going to happen as the worst scenario or the must scenario. We're all going to die. This is not a joke.
What's going on, guys? K-Dub here with another episode of Crypto Zombie. Welcome back to the channel. Hope you're having a great day today. Now, obviously, there really still isn't much to talk about as far as the current Bitcoin price is concerned. In fact, you can see right here, we had this crazy pump to the upside, right, when we were anticipating the ETF. Then we dumped all the way down here at some of the lowest levels that we've seen since basically last year. And we find ourselves in the same exact region, in the same cluster of area that we've been trading in for basically 2 months. So ultimately right now, you know, some people are saying it's time to get bearish or we should be getting super bullish. Realistically, it's actually quite neutral on the chart. Now, I do have some very interesting TA that I want to go over at the end of this video, because we have some sort of discrepancies between the short-term Bitcoin price action and the longer-term Bitcoin price action. Now, before we get into the video, the one thing that is a little bit concerning, you know, on the shorter time frame is this right here. And you could see that we were in this major parallel channel, right? You could see, obviously, you know, we were bouncing around in this area. We would hit the resistance up here. We would hit the support down here. We even had this crazy wick right here. Perfect bounce up. But what we have right now is a situation in which, you know, zooming in, we did have this sort of potential bear trap. It acted as resistance, right? 1 day of support, and now we're kind of just hanging out on that line. So obviously, if Bitcoin can't at least get back up to this heart line, you know, up here, then of course there is that potential chance that we do have a breakdown, you know, maybe even to some of these lower levels down here, right? But what I want to talk about today is something that I'm actually really excited to make this video, because what I want to look at more realistically is the macro about what's everything that's going on right now. We had the FOMC, right? The Fed said that they're going to pause, but they're not looking to, you know, reduce the rates. So that was creating some instability in the traditional stock market. Maybe that's bleeding into Bitcoin a little bit right now. But if you actually look at the 12-month or, you know, the yearly outlook, it's actually pretty incredible. And, you know, we're going to talk about today why I think there's obviously going to be more people globally, not even just in the US, globally moving into Bitcoin, but also some insane data that I didn't even know regarding the ETF, right? So there's been a lot of speculation about the institutions, whether or not they're actually funneling in. In fact, it was one of the most successful ETFs ever launched, in the top 0.1% from what I'm hearing. But when you hear what actually has been going on right now, and you realize what could be happening, or what is most likely about to happen within the next 3 to 6 months, well, you are definitely going to want to strap in for that, guys. Today's video is going to be awesome. I love you. And by the way, to everybody asking, why do I wear the same hat every single day? It's not the same hat. I actually have 4. I have 4 of these hats, guys. Come on, I'm not wearing the same one every single day, but you know why I wear it, because Bitcoin is where it's at. That's what we focus on for the most part on this channel. And where I wanted to start right here is just this sort of this analysis, from Wall Street. And they're saying that they see crypto equities seeing a revenue growth of 35% this year alone. Now, you could see that pretty much blows all of these out of the water, you know, real estate, energy, financials. I mean, this is basically where they're saying that this is the place to be. However, obviously, if we have a look, ETFs have happened. Nothing's really going on. Price is staying the same. In fact, it pulled down from the excitement leading up to the ETF, right? But if you come over here, 21 Shares President has actually said that it's one of the best launches of all time.
At the end of the day, these flows have been really promising. It's one of the best ETF launches of all time. We've seen north of $600 million in assets come into our product just in the last couple of weeks. That's really exciting because it's coming from a diversified base. And so while, yes, you're seeing some churn through legacy products, you're seeing movement towards new product in the market that actually has a lot of really critical features towards welcoming advisors into the community. which is ultimately, I think, how we're going to start to see the crypto ecosystem evolve from here.
So Hani Rashwan was over here on the, that's a terrible photo. I didn't mean to pause on Pomp's face like that. Here, there we go. That's a little better. So he was over here talking, and he's the CEO of 21 Shares, and I wanted to sort of go into 3 specific things that he had said in this interview. He talked about the ETF launch. Truthfully, honestly, was it really successful? Right? He discusses the next 3 to 6 months and gives a shocking perspective into something that I didn't even realize hasn't even happened yet. And then he goes into, honestly, why this price action isn't worrying him. But I want to start with his view on the ETF and what he saw, initially.
It's going a lot better than I think anyone in the space would have thought or realized going into this. It's the inflows are very high, especially for a new ETF. Inflows being high on day 1 or day 2 is one thing. Inflows being this high, I think we sold 60 million yesterday or so, almost 2 weeks in. This is sustained excitement, and it says something. GBTC's dynamics are super interesting. We should continue to see outflows. The outflows, people may not realize, are limited. So the market makers are only able to sell a certain portion on a daily basis, which is why it's hovering around the 500 million mark per market maker. And you'll start seeing, again, more sustained pressure there, but it should stabilize at some point. There are a lot of others that are selling out of GBTC for other reasons, like the FTX bankruptcy estate, and that's part of the downward pressure on Bitcoin itself. But aside from all of that, we've collected over $500 million in new Bitcoin in just a few days here. So did a number of other issuers as well. And so the amount of excitement, the level, the speed, and especially considering the institutional investors are not here yet, is really, really exciting and blew out of the park completely anything that I thought this would be.
And this is where it brings us with, a lot of that is what we had already talked about, but it's nice to hear other people have similar views. But this is where he goes into what is really happening right now, right? Are the institutions bum rushing it? Are they saying no? Are they not interested? Is it just retail investors that finally have a comfortable vehicle? Well, this is what he had to say. And I was honestly a little bit blown away by the fact that I myself didn't even realize this process needed to happen.
So when people say institutions, it could mean very different things. So far, this is just retail excitement plus the kinds of institutions that can move very quickly. So it's family offices, it's maybe hedge funds or traders, but it's not who you think of as a long-term institutional investor like a pension fund or an insurance company, or even on the advisory side where you have advisors that are controlling a large amount of assets on behalf of a large number of customers. That is not here yet. This is not eligible for those guys yet because there are all these procedures that you have to go into that includes the product being up for a certain amount of time, them picking eligible products. There's a big due diligence process that they must do in order to come in. But this, again, adds to my excitement because what's really happening is we see this wall of money and we see it and we understand how large it must be considering that it hasn't yet hit us and these are the inflows. But it will still take a few months. 3 to 6 months from now is when you'll start seeing significant institutional size checks. And that's when people are coming in with single check sizes of 100 million, 500 million, 50 million. Whereas now it's excitement, it's family offices, and it's a bunch of traders.
So we know that these things take time, but obviously these bigger institutions, they are going to take a lot more time, which is why I said it's not an overall sell the news event, right? Really, what it did was it's an ongoing event. It actually opened the doors, and now these doors are open forever, right? So that's the key that you have to pay attention to. And, I am tired personally of talking about the ETF, I'm not gonna lie, but if you look at the macro, right? I mean, did you guys see what just happened, for example? Right here, it said regional U.S. bank stock sank on Wednesday, dragged by a 38% plunge in the shares of New York Community Bank Corp after it cut its dividends and posted a surprise loss, renewing fears over the health of similar lenders. And at the same time, like Stack Hodler is pointing out, multiple bank stocks are looking shaky today. Now, I don't remember if you guys what happened during the last banking collapses where USDC had that depeg. Oh, and they tried to blame crypto, but let's be honest, everything it was fine on USDC's and the banks were not able to commit to the 1-to-1 ratio value of the USDC, but they blamed crypto for that, but we know it was the banks, right? You guys remember what happened? Yeah, that's right. Bitcoin actually pumped. Bitcoin pumped during that mini banking crisis. So the question is, are we seeing early signs of part two? Now that all of Wall Street has easy access to Bitcoin via the ETFs, just imagine how hard BlackRock, Fidelity, etc. will be pushing Bitcoin as the flight to safety this go around. For the first time ever, incentives are fully aligned with the world's most powerful financial institution to pitch the Bitcoin bull case to the world. 39 days until BTFP expires, 76 days roughly until the Bitcoin halving. This is the setup that we're talking about, and this coincides as a perfect storm like we had seen in the previous clip that I just showed you guys, right? That's why people like Robert Kiyosaki say, why I own Bitcoin, because it's protection against the theft of our wealth via our money. Fed Chairman Powell, Treasury Secretary Yellen, and Wall Street bankers, they steal our wealth via our money, specifically via inflation, taxation, and stock price manipulation. That is why I save and invest in Bitcoin, not stocks, bonds, and of course, fake dollars, right? But here's where it gets really, really interesting. So there was Lawrence Lepard, Preston Pysh, Greg Foss, and James Lavish. This is not a newer clip. This actually was from before the ETF. But this is, again, what you have to consider, all right? I understand you can get caught up in the charts. You can get caught up in the daily motions and, oh, the ETF didn't send Bitcoin to 100,000. But you have to understand these are the things. Before we had the ETF, before we had countries buying Bitcoin, or before we had politicians discussing it, these were the narratives that we were speaking of, and we all know what's going to end up happening. And this is why the next 12 months are going to not only be a roller coaster for Bitcoiners as well as no coiners, but I think it's going to be a massive shock to the system. And again, if you do not have any allocation to Bitcoin, I might be a little bit worried.
I would say, I think in the coming 12 months, we're going to be, as Bitcoiners, going to be kind of surprised at some of the things that we see. In particular, I think one of the things that's going to surprise us most is I think you're going to actually see a large bank, call it Fidelity, BlackRock, or whatever. I think you're going to see one of these large banks actually start to recommend Bitcoin as a percent of the standard portfolio for people. And I know that sounds crazy for people listening to that. I think that's happening in the coming 12 months, where I could see a BlackRock say, we think it's appropriate for 1% of a person's portfolio to be in Bitcoin.
Oh, and by the way, we have this ETF for you.
And we have this ETF vehicle for you to do it. But I think that it's their only hope out of this. I think there's people on Wall Street that are actually able to do this math. I think they're somewhat starting to see what the value prop of Bitcoin is, in that it actually provides salvation to this disastrous scenario. And I'm very hopeful that that it'll be hopefully enough to kind of bridge this transition. And I think hang on to your hats, because I think the next 12 months for Bitcoiners is going to be one hell of a ride.
I want to just read 3 headlines. These are just from yesterday. Nick Tamaros in the Journal. If the bond market keeps this up, the Federal Reserve will have less of a reason to hike rates again. Wonder what that means. Wall Street Journal headline yesterday. Rising interest rates mean deficits finally matter. Bond sell-off might force the Fed to rethink shedding assets. What does that mean? Okay. Breaking markets. Fed's daily. With the rise in bond yields, the need to do additional tightening by the Fed is not there. What does that mean? These are going to print. They're going to print until their eyes bleed. And we know it's going to happen. And so all we've got to do is outlast them and then watch them as they suffer. You know, they were very close to losing control of the whole thing in March when Silicon Valley Bank went down. I mean, they thanked their lucky stars that the BTFP worked and that, you know, Aunt Janet was able to bluff everybody into believing that they would cover all the deposits, because there's $17 trillion in bank deposits. The FDIC cannot cover that amount. But those banks are still hurting. I mean, 50 to 60% of the banks probably have negative equity right now. And wait until the wages from all these labor movements start to flow through the earnings statements of all these companies. I mean, I feel terrible for these people who are striking. I understand why they're striking. The strike is they're getting roasted by inflation, but they're about to lose. They're about to realize they got a bigger problem than inflation. They're about to lose their job because the companies are going to fail, and then they're going to be out of work. I mean, guys, sadly, this is going to be an unbelievable shit show, in my view, in the next 12 months. And my sense is that politicians are going to respond the way they've always responded, which is to cover their own ass, to try and protect their own ass. And the lowest hanging fruit, the easiest way for them to do it is going to be to chop rates and send out UBI. And to answer your question, Preston, I think it's going to be unbelievable. I think the Fed balance sheet is going to 20 billion or 20 trillion on the next cycle. They're going to have to, because once again, they're steering this car between these guardrails of too much inflation and too much deflation. I mean, we've got negative M2 growth today. We haven't seen that since 1930, which was the Great Depression. And so if they think they can do the same thing and not have the same result, good luck.
I would say, I think in the coming 12 months, we're going to be, as Bitcoiners, going to be kind of surprised at some of the things that we see. In particular, I think one of the things that's going to surprise us most is I think you're going to actually see a large bank, call it Fidelity, BlackRock, or whatever. I think you're going to see one of these large banks actually start to recommend Bitcoin as a percent of the standard portfolio for people. And I know that sounds crazy for people listening to that. I think that's happening in the coming 12 months, where I could see a BlackRock say, we think it's appropriate for 1% of a person's portfolio to be in Bitcoin.
Oh, and by the way, we have this ETF for you.
And we have this ETF vehicle for you to do it. But I think that it's their only hope out of this. I think there's people on Wall Street that are actually able to do this math. I think they're somewhat starting to see what the value prop of Bitcoin is, in that it actually provides salvation to this disastrous scenario. And I'm very hopeful that that it'll be hopefully enough to kind of bridge this transition. And I think hang on to your hats, because I think the next 12 months for Bitcoiners is going to be one hell of a ride.
Now, of course, everything on this channel, not financial advice. I just like to show you the facts. At the end of the day, am I a permabull? Yeah, a little bit. Obviously, guys, I wouldn't have been doing this for 8 years if I didn't believe in it. But, I love coming back and making content every day. And honestly, I don't really have to do these videos. Like, no one, I don't have sponsors or anything like that. I do these because I truly enjoy sharing this knowledge. And if even just one person out there watches this video and has a somewhat better understanding, of Bitcoin, which I do encourage you guys to share these with other people, then I think that that's good enough for me, right? Now, of course, there are some of these extremes where, you're hearing guys like, for example, Tim Draper talking about how eventually everyone's going to ditch the dollar and Bitcoin is going to become the unit of account.
So I miscalculated on how aggressive how scared the U.S. government was running. And now they realize that Bitcoin's actually better for everyone. It keeps perfect records. It, the people who they all thought were criminals using Bitcoin, turns out they were all caught. So using dollars is probably better for a criminal. And I think that there's going to be a moment where there's a run on the banks the way after the Civil War there was a run on Confederate money, and there was a run on the Greek drachma and a run on the French franc when they became a part of the euro. So I actually think that there will be a moment in time when I can buy my food, clothing, and shelter all in Bitcoin, and people won't want dollars anymore.
Now, is that going to happen? Well, anything is theoretically possible. It could happen. Do I think it's going to happen short term? No, I don't. I just don't think that something like that is realistically going to happen short term. And I'm one of the biggest Bitcoin bulls there is. But it is funny how now you're starting to see, I don't want to call them the normies, but the regular people that just normally would have no interest in Bitcoin and cryptocurrency, realizing that. I mean, this is a post that was going pretty viral that this person was having. I don't know what podcast this is from. And, he was speaking to this woman who was in debt, and he was basically saying, well, you got to sell your Bitcoin. And look at her, struggling. I know I should probably do that to pay my bills because my, credit card is expensive, but sell my Bitcoin?
What other investments do you have? Bitcoin.
How much?
Well, I invested over 3,000, but right now it's down
2?
to.
Hey, we've recently had a bounce.
Yeah, it started to go up, which is good.
Yeah, what's it at?
1,888.
Cool. Sell it.
What?
Put it towards the next car. Yep.
This could go up.
It could.
It's over
And
3,000 I
It
invested.
could. I'll tell you what 100% will happen no matter what. These credit cards will keep killing you. Doesn't matter. Get back into that bullshit if you want to in the future. Right now, you are taking care of your past sins. You f***ed up. Take care of it. Be an adult.
Because I also have another account on here, $440.
Yep. Okay. Take it out. Take out all this money unless it's in like a Roth IRA or tax advantage deferred account. This makes no sense right now. You don't need this. Dude, I am so about investing you have no idea. But the interest rate on these credit cards do not mathematically justify being in that, especially in a risky asset. The way your account is balanced into Bitcoin, you're like 50-50. It makes no sense. Sell it out all into this. And you're almost halfway done. You're almost halfway done with your credit cards at that point. Well, you're almost 2 cards done, but the other cards are just higher balances. Okay? Will you do that? Will you be an adult? Will you act like you're 27 years old and not 13?
I'm willing to sell Robinhood.
What the?
And I'm willing to sell the 440.
Why not Bitcoin?
Because it's going to go back up.
No, you don't know that.
I do.
You do not know that. Nobody
That's
knows
where
that.
faith comes in.
Okay, well, you're gambling. Like, I do have money in Bitcoin, and I hope it goes up. I do not know anything. You do not know anything. One thing I know for a fact, these credit cards are killing you.
By the way, shout out to whoever that is. I don't know whose channel that's from. If that's a YouTube channel, please don't demonetize me. I'm just doing this for, informational purposes. I hope that I can leave that clip in the video, but some people get mad when I share stuff. I don't know. But, getting back to, for example, like what Jack Mallers was saying and the whole macro concept of today's video, because I want to focus on the macro because really there's not a lot happening on the charts. It's pretty boring. But, this is exactly why you're going to see more and more people globally adopt Bitcoin. It's not really even going to be an option at some point. It might be the only solution.
First of all, Bitcoin's this open public digital infrastructure for the world. So you see utilization all over planet Earth for all sorts of different things, right? Anyone can do whatever they want with it, which is part of the beauty and part of the attraction. I personally think that the killer use case we'll see over the next few years is the fact that all 8 billion human beings on the planet face fiat debasement. That means that their government's local currency loses value persistently. And global debt to GDP is what, 360% right now? So everyone has to own something else. And I think the killer use case over the next few years is going to be owning something that they can't make any more of. And so that's why I think Wall Street's attracted to it. That's why I think you've seen a price run up, is because, even gold being bullish in the face of a hawkish Fed, the world is concerned with the treasury and the bond market. The world is concerned with the debt that governments have accrued without any growth. And they found this thing that's free to hold, that's scarce, that you can put in your brain. And it's just the killer app. It's the best expression of fiat debasement that literally everyone on the planet has to face. So that to me is the killer app. And then, people make payments with it. People do all sorts of stuff with it because there's no central governing party to tell them not to, which is beautiful. It's pure humanity.
And I know sometimes that super ultimate hyper Bitcoinization libertarian talk can, kind of turn people off. Look, I get it. There's multiple outcomes, right? There's multiple possibilities, and maybe there's a little bit percentage of each camp. Maybe some of this is what affects growth, and some of this is what affects growth, right? But at the end of the day, all the fundamentals are pointing towards a positive Bitcoin adoption, first of all, and then obviously you obviously lead to price appreciation, right? Which is exactly why, getting back to what Hani said originally in the Pomp video, he wasn't worried.
Bitcoin is going to lead the charge here, and there's a lot of attention to it. And it's still very much a new asset, but it is a more mature new asset. So previous percent gains for some of the bigger assets are just not realistic. If you think about how much Bitcoin has gone up in the last bull market, or even crazier yet, the one before it, these are outrageous things to happen in the short term. And I think we've talked a lot, and my single biggest pet peeve on this whole space is our lack of long-term thinking. We do not need to see 1,500% gains for us to be excited about either the viability or the future of this asset class. We need to see more users, more customers. So I'm comforted by the on-chain metrics that we're seeing. 21Co is the largest producer of dashboards on Dune.com. And we display all the wallet addresses, among other analysis, but we display wallet addresses across a bunch of different networks. And you can see it steadily going up and to the right. More usability, more wallets, more unique customers, not just in Bitcoin, but elsewhere. And if we continue to do that, I'm not really that worried about the price too much. I'm sort of a unique crypto CEO, and you've made fun of me for this a few times. I don't really know what the price of Bitcoin is on a daily basis, nor do I care. I'm really in this for the long term. And so I look at all of these other factors, and I find things that are incredibly comforting and exciting.
And I still can't stress enough, when you have a look at this balance on exchanges, it just continues to fall over time. So once we have the halving, once we have the 3 to 6 months where the institutions are able to get in, and then you have the macro at play, you have the money printer turned back on, you're seeing the debasement of fiat currency, what do you think's gonna happen? I mean, I feel like this is like chapter 1 of economics, right? I mean, for me personally, this is why I believe in Bitcoin. And you may have seen this video, and normally I wouldn't do something like this, but if you have the time and you have somebody who maybe doesn't understand Bitcoin or doesn't see the purpose of Bitcoin, I want to play this clip that came out almost 10 years ago. You might have seen this already, but this was Nouriel Roubini. They called him Dr. Doom back in the day. He used to be like the big bad guy back in the day. I don't know. I guess he doesn't talk about Bitcoin anymore. But this was a hearing, and this is probably one of the absolute best explanations I have ever heard of Bitcoin. It's 6 minutes long. If you've already heard it, we're going to jump into the TA afterwards. But this is an amazing clip explained like to a 5-year-old. And I think if anybody still doesn't understand Bitcoin after this, well, then there actually just might not be any saving them.
Chairman Crapo, Ranking Member Brown, members of the committee. Thank you for the opportunity to speak with you today. My name is Peter Van Valkenburg, and I'm the Director of Research at Coin Center, an independent nonprofit focused on the public policy issues affecting cryptocurrency and public blockchain networks. What is Bitcoin? Bitcoin is the world's first cryptocurrency, and it works because of the world's first public blockchain network. What does Bitcoin do? It's simple. It lets you send and receive value to and from anyone in the world using nothing more than a computer and an internet connection. Now, why is it revolutionary? Because unlike every other tool for sending money over the internet, it works without the need to trust a middleman. The lack of any corporation in between means that Bitcoin is the world's first public digital payments infrastructure. And by public, I simply mean available to all and not owned by any single entity. Now, we have public infrastructure for information, for websites, for email. It's called the internet. But the only public payments infrastructure that we have is cash, as in paper money. And it only works in face-to-face transactions. Before Bitcoin, if you wanted to pay someone remotely over the phone or the internet, then you could not use public infrastructure. You would rely on a private bank to open their books and add a ledger entry that debits you and credits the person you're paying. And if you both don't use the same bank, well, then there'll be multiple banks and multiple ledger entries in between. With Bitcoin, the ledger is the public blockchain, and anyone can add an entry to that ledger, transferring their Bitcoins to someone else. And anyone, regardless of their nationality, race, religion, gender, sex, or creditworthiness, can for absolutely no cost create a Bitcoin address in order to receive payments digitally. Bitcoin is the world's first globally accessible public money. Is it perfect? No. Neither was email when it was invented in 1972. Bitcoin's not the best money on every margin. It's not yet accepted everywhere. It's not used often to quote prices, and it's not always a stable store of value. But it is working, and the mere fact that it works without trusted intermediaries is amazing. It's a computer science breakthrough, and it will be as significant for freedom, prosperity, and human flourishing as the birth of the internet. And Bitcoin is just the beginning. If we can replace private payments infrastructure, then we can replace other private choke points to human interaction as well. Now, why should we want to build more public infrastructure? Why should we embrace blockchains over corporate intermediaries? Why should we tolerate their inefficiencies and work to make them better? Why should we want the pioneers of this technology here in the United States and not fleeing overseas? A simple reason. Because the corporate intermediaries providing today's critical but privately owned infrastructure are becoming fewer, larger, and more powerful, and their failures are increasingly grave. So roughly half of all Americans, 143 million people, had their Social Security numbers exposed to hackers because of a breach at Equifax. The SWIFT network has relayed hundreds of millions of dollars in fraudulent transactions because of hacked member banks in Bangladesh, Vietnam, Ecuador, and Russia. The FBI suspects now that the largest of these hacks was perpetrated by North Korea. Corrupt, low-level employees at an Indian bank, Punjab National, were able to fraudulently certify SWIFT messages, stealing $1.8 billion. It's the largest electronic bank robbery in history. In fact, it's the largest bank robbery in history. In October 2016, an estimated 1.2 million internet-connected devices were hacked and turned into a botnet that for several hours made prominent websites unavailable across Europe and North America, including CNN and Fox News, the New York Times, and the Wall Street Journal. Increasingly, physical machines are being connected to the internet to augment their capabilities. They're wired through servers that are owned and maintained by private and trusted intermediaries, the so-called Internet of Things. Pacemakers from St. Jude's Hospital have been hacked. Baby monitors from TrendNet have been hacked. And Jeeps from Jeep have been hacked to the point where they can be remotely commandeered and driven off the road. Now, those vulnerabilities are inescapable in systems that have single points of failure. It doesn't matter if the point of failure is a corporation or if it's a government. There shouldn't be a single point of failure. Similar choke points existed before the internet. If you wanted to deliver a message, you'd have to go through one of 3 television broadcasters or a handful of newspapers. Private corporations are essential, but no critical infrastructure should rely on 1 or 2. The internet removed single points of failure in communications infrastructure and ushered in a wave of competition among new media corporations building on top of its public rails. Blockchains can similarly disintermediate critical payments and IoT infrastructure. The technology is not yet ready to answer all of those questions today, but it is our best hope. And as with the internet in the 1990s, we need a light-touch, pro-innovation policy to ensure that these innovations flourish in America for the benefit and security of all Americans.
So again, I want to show you a few things on the TA today. What I want to show is what I'm seeing on the charts, and I want to show you the difference between the shorter term outlook and the longer term outlook, and I'm going to show this to you in real time, okay? So you can see right here, in the shorter term, okay, having a look, we're still just dancing around this area, right, where we had this resistance, support, resistance, resistance, support, support, resistance, right? Okay, so you can see how important this area is, and that's why I have this blue zone drawn out. And if we come over here, this is what we're doing. We're still technically just bouncing around in this area, right? Yes, we had a bull trap here. Yes, we had a bear trap here. But realistically, you can't be anything. I mean, yes, you could be bullish on Bitcoin. I'm definitely bullish for the end of the year. But short term, especially on this daily chart, unfortunately, what we're seeing is we are seeing the money flow flowing to the downside. We're also seeing a perfect anchor and trigger wave, right? And that trigger wave perfectly coincided. In fact, if you were using Market Cipher specifically on that day, it would have kind of told you that, you know, that would have been the time to short. Right down here, it did bounce back up. But my point is, you're seeing the money flow point out You're seeing that we had that trigger wave, and it could be signaling to us that Bitcoin could be getting a little bit weak. Now stick with me here, because it's not all, well, first of all, I'm not being bearish, but I'm just showing you the lower time frames are a little sketchy. Now look, you switch the same time frame to the weekly. Totally different picture. So lower time frame looking a little bit more concerning. Higher time frame looks like this money flow is going up, right? We had two trigger waves, one right here, one right here. And we also had a beautiful bounce off the top of this resistance, which has now turned into support. So my point again, short term, looking a little sketchy. On the weekly, looking good, right? If we go over here, same thing. So this is the daily. This is the EMA ribbon. All right, we're seeing that we have the wave edge curving down. We also see right here that, yes, we did get support on the 89, but generally speaking, once you start to interact a little bit too much with the EMA on the daily, usually it's supposed to support you as support. Once you lose it, for example, right back here, right, support, now we're inside of it, and what happened? We had a correction. How much did we fall from that point? We got inside of it. We fell down about 14%. And then you could see that until we got back to that level, we basically went sideways for about 65 days or about 2 months, right? So again, you can see over here, we're back above it. That's good. But if we start interacting with it a little bit too much, then we could have a similar situation like we had back here or back here. Or I can really go back. Well, this is a bear market, but you know what I'm trying to say. So again, but here's the thing. Sticking to today's topic, we switch it to the weekly, we switch it to the higher time frames, and what are we seeing? We're seeing a perfect retest at the top of the major EMAs. And that's exactly what you want to see when you go into these bull market trends. Yes, you can have these dips, you can fall down into them. You see, once you start to fall into them too much, again, that's when you lose it. But as long as we can maintain above it, right here was actually kind of interesting. We did get below it, but that was that double top we had talked about. But, coming over here, we could go down to the 89 theoretically, and that puts Bitcoin at around $31,000. Now, again, do I think we're going to go down to those levels? I don't know. There's a lot of people that want to buy at those prices. But again, guys, short term looks a little bit shaky. Long term looks good. And I'm not even talking crazy long term. We're talking like, maybe 2 months. Maybe 2 months you might have to wait consolidation. Same thing here. We're actually being squeezed between the 50 and this longer term moving average, but on the daily, it's not looking great, right? We're under this parallel channel, or at least we're trying to test it right now, and we're starting to fall down to these areas. Now, we did have a nice support on the 100 MA on the daily, so maybe that's where we end. I mean, that coincides perfectly with this trend that we had right here, right? We had support, we had support, we had support, we had multiple supports here, so that was a very, very nice test. So this one's a little bit neutral again, but obviously switching it over to the weekly, you could see holding up above the major trend, very nice. Money flow moving up, as well as being supported, like I said, on that major trend. Now, I would like to, at some point, test some of these major moving averages down here. With the 21 exponential is usually where Bitcoin, if it does have a retracement, it tries to at least bounce off that area. That area is sitting at around 31,300. But again, keep in mind, the longer it takes Bitcoin to dump, the higher this is probably going to end up moving. So if we consolidate sideways, and then have the dump, just for example, let's say we dump mid-April just before the halving, as a I don't know, some kind of a weird market manipulation play. Well, now Bitcoin's only going to go down to about 37. So again, time is in fact on our side, right? Again, you look at the shorter term daily right here. I'm just trying to make a point here that I'm not bearish. I'm just showing you guys that, when Bitcoin tends to, play around in this area for a little bit too much in the Gaussian channel on the daily, then, that channel will now turn into that resistance. Now, of course, this was the bear market. So let's come over here and have a look at the, the bull market, right? Where I believe we're in a bull market. So we had this, we started dancing around, and then what did it do? Held us down for a little bit, right? Popped back up, kind of came back in there, and then what did it do? Sent us underneath it, right? So we're dancing around in that area again. So again, like I've been trying to point out, short term looking a little questionable. Switch to the weekly, switch to the higher time frames. Generally, ignore all these circles. Generally, when we get above that on the weekly, we tend to stay above it for a very long time, right? This was COVID, right? So I guess that's an outlier. Probably would have just hung out around the median. But you can see right here, we stayed above it for a very long time. So, that level is sitting at around 30. Again, this level will probably continue to curve up. And unless we get a flash crash today, probably if we do even have some sideways or, even like a fake out and we come back down, now you're still looking at maybe that $35,000 to $37,000 area. And, worst case scenario would be retesting this major trend that's been pretty much all the way back here since July of 2017, which we've never fallen below except for this 1 week during COVID. but we closed above it, and then the next week we stayed above it. So yeah, and that level is sitting, if we were to fall today, at around $25,000. But again, that's if we fall straight down today. I don't think that's going to happen. You know, so for the most part, what I'm trying to say is that we are still just stuck in this band between around 40 to 44,000. And, you know, you can't really be getting overly bullish or overly bearish. Personally, I'm a little skeptical only based on the Bitcoin price action that we've seen in the past, right? We've seen that historically, even if I didn't know the ETF news, if I was just looking at the charts, historically speaking, we usually have a bit of a cool off period, a sideways period. Sometimes we even go lower leading into the halving, right? So I'm still standing by that based on statistics, but, you know, short term, you know, if we are going to go off this, you know, sort of shaky, unquestionable price action, then again, you know, you basically want to get a nice weekly candle close. I would like to see it above 45,000, but the 40,000-ish area could be good. And obviously, on the flip side, a close below the $40,000 area, especially for a week, would probably suggest that we're going to continue sideways and down, right? So that's sort of the short term mixed with the long term, so you guys can see where I'm coming from. I'm not getting bearish, but long term or even midterm. When I say midterm, I'm thinking like, you know, like maybe not 3 months, but 6 months. 6 months from now, I don't see why the Bitcoin price shouldn't be higher than where it is right now. And I still think that there is a very good possibility, my opinion, you know, not financial advice, very good possibility that we see a brand new all-time high for Bitcoin this year. So it could be November, it could be December 31st. I don't think it's going to take that long. But I do think we will see it by the end of this year. We may just have some turbulence in the middle. So that's it for me, guys. Thank you so much for coming back to the channel. Hope you are enjoying your day. Remember, if you guys do want to learn how to trade, you can check out Apex tutorial. I need to make one for CoinCatch and LevX. They're basically all the same. If you could trade on one, you could trade on the other. But if you guys want me to, I'll do it. And they are still running those bonuses below, up to $5,000 on LevX if you guys are interested. So that's it for me, guys. Thank you so much for coming back to the channel. You guys rock. You're the reason that I make these videos. Until next time, stay crypto. Hope you're having a wonderful week. And of course, peace out.